Hello everyone, my name is Chris Titley and welcome to the FinTech Australia podcast. The FinTech Australia podcast takes listeners on a deep dive across the FinTech industry in Australia, focusing on the challenges, opportunities and big stories our community faces. Let's get to today's episode. Hi, it's Chris Titley here, and as part of the FinTech Australia podcast series, I'm joined by Joseph Healy, co-founder and CEO of ASX-listed Judo Bank, joining us from Queenstown. Joseph, hello.
Hi, Chris. It's lovely to be here.
And for the people out there that can't see, but Joseph's got a beautiful backdrop in Queenstown. I'm kind of jealous being in somewhat overcast Brisbane at the moment. But the story is not about our holidaying and where we are. It's about the book. Before we get into that, I'd love Joseph to give a bit of a history of his career in banking and then the formation of Judo Bank and how it's all going.
Yeah, no, delighted to do that. I mean, I'm a career banker in the sense that when I left university going on 37 years ago, straight into banking. And I've worked for 5 different banks in different parts of the world. I was fortunate enough to hold senior executive positions both at ANZ here in Australia and the National Australia Bank, 2 very good banks. And but I've always been passionate about the purpose of banking. Not always been proud, if I can say that, of the way banks have conducted themselves in recent history. But as to the core purpose of banking, I've always felt banks playing such a fundamental role in the economy. And I've always believed that. And that kind of led, some come on to it in a second, led to the establishment of Judo Bank. But career-wise, I've been lucky. I had a great career at Citibank, at Lloyds Bank in London. I was in London mainly with Citi, CIBC World Markets, which is a Canadian bank. Across all facets of banking, from the A to Z of how a bank operates. And I've enjoyed my career and I still remain passionate about banks and banking. I'm excited about the revolution that's taking place inside the industry, both in terms of the application of technology and established businesses, but the emergence of a whole range of new actors in the FinTech community being a classic illustration of that. And
Joseph, your journey, which took you overseas and brought you back to Australia, obviously there was a spark there thinking there's a better way to do things or a more streamlined way to do things than the establishment of Judo Bank. Do you want to tell the listeners about how that began and going back to day one? Do you remember it clearly and really kind of give you a bit of a story about how that began?
Well, just kind of repeating a comment I made a minute ago, I'm always passionate about the role that banks play, but I had become quite disillusioned about how the banks were prosecuting their strategy, if you will. I felt that, and this is true of the banking industry globally. So I'm not picking out the Australian banks here, but it is a global industry, and banks in other parts of the world do kind of look at each other and try to copy what is working and what they perceive to be working. And we saw that, for example, with Wells Fargo in the United States, which was the pin-up bank of the 1990s and the early 2000s, that almost all of the banks, certainly here in Australia, used to look at the way Wells Fargo conducted themselves and thought that's what we want to be like. Because then what we found out about 7 or 8 years ago is that it was a huge fraud at Wells Fargo. There was all sorts of behaviors and practices that were scandalous in nature, and it resulted in that bank falling from grace. But what I saw was an industry that had become quite self-serving. It wasn't really looking at the privileged position that it holds in society, and it does hold a hugely privileged position. There's a concept of social license, that the banks have a social license that they should conduct themselves by. But actually, what had happened in the industry, it became very self-serving. The shareholder value became the rallying cry. Executives made decisions based on what maximized shareholder value, because that was then correlated to remuneration. And by the way, I was very much part of that. So I'm not pointing a finger without saying I was very much part of that. But I felt that the banks had lost sight of what they were there to do. And we saw profits soaring, and we saw executive remuneration soaring. But we also saw customer satisfaction heading in the opposite direction. People felt that they were getting a rough deal. They were being treated quite by an arrogant institutions, and the institutions that they couldn't do without. So you're kind of forced to deal with them, but you've been treated pretty shabbily. And of course, as the industry consolidated after the financial crisis, that only got worse. It was really the trends in the industry that got myself and David Honore and a few others talking back in 2012, 13, that there has to be a better way. And, we at that stage, quite established career-wise. I had a very powerful senior position, I should say, in one of the large banks. But I felt frustrated about the way the banks were working. And David and I used to talk about, when we look back in our careers in 20 years' time, what do we want those memories to be of? Do we want them to be of the fact that we made a lot of money? Or do we want them to be of actually we made a difference? And so it was that idea of making a difference and going back to the fundamentals of what banks are there to do. That was the genesis of Judo Bank. And David and I used to catch up every Friday evening around about between 4 and 5 at the Green Gate Hotel in Upper North Shore, Sydney, for a couple of beers. And we would download on the week. We talk about what's working well and what's not working, and we'd talk about the future. And it was in one of those Friday evenings that we started talking about the idea of building a bank that really went back to the way banking should be done, in a way that and also particularly focused in on small to mid-sized businesses, because we felt that of all the segments of the community that were getting a pretty raw deal from the banks, it was the small to mid-sized businesses. I mean, people like you and I, or people who, looking for a mortgage, we can shop around and we can and get the best price. And if you're not happy, you can refinance quite relatively easily. But small businesses were really stuck. They didn't have a lot of options, and they were being treated in a manner which I felt took their loyalty for granted. And I couldn't find a customer satisfaction score that had the banks being rated higher than 3 on a scale of 1 to 10. So there was a strong sense that the small, mid-sized businesses were a market looking for a different approach. And that was the genesis of Judo Bank. We started to think about building a bank that is a pure play specialist bank that only looks after small to mid-sized businesses, but does that really, really, really well. So that was the genesis. But of course, then after you've kind of sat back and reflected on, well, that's a good idea, but how do you do it? You would need to raise a lot of capital. There was no history of new banks being established in Australia. The big banks were very dominant. The regulatory environment set a very high bar. And so the challenge then was, well, nice idea, but how are you going to make this work? And how are you going to attract capital?
And lots of it.
And lots of it. And the one thing that, whilst we knew banking inside out, we also knew that if we were going to start on this journey of building a new bank, we really had to be clear about what the end game looked like. So what was the 5-year, 10-year view? And we spent a lot of time talking about that. But the 5-year view was that we wanted to get a bank that was able to raise $1.5 billion of capital, that was going to be able to attract some high caliber people, who wanted to take a risk, because there was a big personal risk of leaving the comfort, the warm bath of your career inside a big institution, and start building something that there was no precedent for, and take all the financial risk that goes with that. So attracting the talent, attracting the investor capital, and then being really clear about the problem that you're seeking to solve. And this is a issue that I see a lot of startups don't adequately think about. What is it that you're going to be able to do that the incumbents aren't already doing or are not capable of doing? How can you do that in a sustainable way that reflects a clear competitive advantage? So that we thought a lot about this, and of course, I also knew, because we at that stage in early 50s, that if this all blew up, and of course the chances of failure on startups are very high, if this all blew up, then not only would we have lost all our money, but we would have lost reputation, and potentially the career options in front of you are not necessarily going to be all that great. So there was a lot of risk involved in this, but the big decision was, let's not die wondering. It's better to give it a go and fail and say, I gave it a go. You're probably going to be poor and divorced, than saying, now let's not do that. And then, you live well in a big job, but your life was unfulfilled.
You're a little bit unhappy. Yeah. Well, unhappy is probably a bit too harsh, but a little bit unfulfilled is the word I'm looking for. Now, you did mention, Justin, that about the things you needed to do to make this business a success, and a lot of that sounded like there was a 5-year plan or a 10-year plan or a strategic plan, as opposed to let's try and beat the incumbent by doing this, or loss lead, or whatever it might be. But you seem to always have this sort of longer term vision, and how has that panned out in your head?
Look, the time we spent on building the business plan, the business case, and the 5-year, and we did have a 10-year view, where was the best time we'd spent in the whole journey. And I even today, when I think about how successful Judo Bank has been, and what were the key determinants of that success, it was the time that we spent at the beginning on thinking through the business case over 5 years and 10 years, measuring twice and cutting once, being careful. Now, not all entrepreneurs are good at doing that, because a lot of people want to kind of get to market with whatever it is, the idea they've got. But we knew that by measuring twice, cutting once, and thinking about the medium and long term for the company, and making sure that all the foundations were put in place that were going to allow the company to grow. To paraphrase Stephen Covey, start with the end in mind. So what is it we wanted to build? And think big also, not small, think big. What is it we wanted to build? And then what is it we have to do today in terms of laying the foundations so that we can build that bank? So we spent a lot of time on that. Risk management, which is something that, is on my mind, a core competency of being a good banker, thinking through all the risks, how we would manage those risks, how we would, take risk, but manage it as best you can. And then the one thing that the strategic narrative, which was really important, as in what is Judo, why is it coming to market, what problems it's seeking to solve, how is it going to make money. One of the things that fills me with enormous amount of pride is that the strategic narrative on Judo back in 2015-16 is word for word exactly the same today, right? When you pick up the documents we wrote in 2015-16, so where are we going to position Judo? How's it going to succeed? How's it going to make money? We've done all of those things because we planned carefully at the beginning. Again, I'm conscious that the vast majority of entrepreneurs want to get on with things. Let's see where it takes us. We'll be agile. I would strongly advocate take time to think about the vision for the company and what it is you need to do to fulfill that vision.
So not just the vision, but then there's the steps in between. And like, for instance, $1.5 billion of capital, you did that in 6 rounds or something like that, as opposed to, like over, start with whatever it might be. Your first raising might have been 60 million or something, but the vision was always to get to 1.5 billion or whatever it might be to build the framework for your plan.
Correct. So, and that was important. So when we went to speak to investors, we said, look, we're going to need $1.5 billion over 5 years to get the bank to a stage where it's generating enough profit to grow its own capital. So don't think about Judo as a $10 million investment or a $20 million investment. You've got to be clear on what the expectations are and be willing to support that that journey. Now, that's a lot of money to ask for a business that is unproven in a market that's dominated by giants and where there's no precedent. And we spent, I think we met 87 investors all around the world. We traveled the world 6 or 7 times, 87 investors before we got our first dollar.
Oh, wow.
So that resilience or perseverance is also really quite important. People kept on saying, we love the idea. We think you guys know what you're doing, but come back when you've done this. Come back when you've done that.
And by the 86th time, you're like, where's the but? And they go, but. You're like, there it is.
Yeah. So you've got to be hugely resilient and persevere and never, ever lose the passion and enthusiasm for what it is you're seeking to do.
Fantastic. And now Judo is listed and the loan book is growing successfully, and then now pops out the other side as a book that you wrote, Joseph, Breaking the Banks, What Went Wrong with Australian Banking. Let's talk about the idea of, sorry, you can go back, but I was going to say there's actually 2 books. Breaking the Banks is a book that I wrote in 2019. There you go. Sorry, it's the new one, isn't it? The black belt.
Black belt. Yeah. Yep. Now the black belt.
Sorry. Yeah.
Is only 4 or 5 weeks old. Is the story of, in many ways, of the journey on judo, but it's not judo. We use judo as a case study, but it's a story about how do you take an idea and build a business. And it goes to some of the things that I've talked about, but also thinking about the culture that you want to build inside the business that defines the business. How do you attract people from a relatively conservative industry to join a startup and not think like employees, but think like owners? How do you manage with regulators? How do you manage your broad stakeholder community? What do you do when things don't work out? Because there were several times in the building of Judo where it looked like we would have to stop and close up. That we were running out of money. Investors that promised us capital didn't turn up. Things weren't going to plan. So all of the challenges of trying to build a business and the lessons that we've learned along the mistakes we've made, but the things that we got right. And so in writing the book, we felt that after a long journey in getting Judo to where it is today, that there were important lessons that were relevant to all startups, not just banking startups or fintechs. And we wanted to put those lessons and insights in a book that we could share with others and hopefully help others. So when you've gone through a journey like this, so quite advanced in your career, and you've learned so much, good and bad, it's how do you kind of pull all that together in a way that others might be able to, you might be able to help others and people might learn from your experience. So that was the motivation behind writing the book. I've written several books, so I quite enjoy writing books. But this, I felt there was a real story in Judo Bank that others would appreciate and benefit from.
And I mean, the lessons that you've learned and sort of capturing them along the way, how do you do it and then write a book about that? I mean, every day is different. You're always meeting different people and networking, and there's different lessons, but then you think, there's one moment or one thing there, I better write that down. Have you done that? Is that how it sort of came about?
Yeah, I took extensive notes along the way. So in the 87 meetings that I mentioned before we got our first dollar, people would say, well, that wasn't a good meeting if you didn't get anything out of it. I disagree with that. I think you learn something in every meeting you have. There's something in it, right? Now, it could be that people say, look, we like this, but, and you say, well, what will it take for you to be ready to invest? And so you're learning, you're getting inputs from a whole set of different investors, and investors are very different. So people have different criteria, different ways of evaluating things, and different requirements, expectations. So hearing what people are saying to you and learning from it was a very valuable lesson. And taking notes, making sure that everything you heard, even when people say, like, not interested in this, then you say, okay, well, this type of investor is not a typical judo investor. So I think, and then the hiring staff, getting people to come into the company, the lessons that you learn along the way there, dealing with being let down by people who made promises to you and then at the 11th minute didn't turn. We had one big investor who'd been doing due diligence on judo for the best part of 6 months. And then literally on the eve of when the money was due to come into the bank, they pulled out without any explanation. In fact, they didn't even turn up. They sent along this accountant and lawyer who we'd never met before, who say, look, Mr. So-and-so has decided that he's not going to invest anymore. And that put the whole capital raising at risk.
Yep.
So then how do you cope with that? How do you manage that? And how do you make sure that the whole thing doesn't become derailed? I think also the importance of being measured in your approach to growing your business, not kind of saying, let's go out and sell as much as we can. Say, look, let's make sure that we've got a clear vision and that we build a reputation for doing what we said we would do. Running our own race is really important in life, incidentally.
Yep.
Too many people and too many businesses get caught up in trying to keep up with or catch up with someone else. Whereas we said, look, we have a very clear plan, very clear strategy. We have the resources that we need to execute on that. Let's not be distracted by anybody. Let's just focus on our game and achieve what we want to achieve at the pace that we want to achieve it at. And think about the medium long term, not the short term.
So there's lots of things to unpack there, but just one thing is about like trends and technology trends. I mean, you talked about technology in banking, you talked about the rise of digital banks and fintechs, etc. But then come with judo, you think about it. I think as a there's no shop front, but behind the scenes there's experienced bankers, there's people that know banking, and that combination seems to be unique in Australia. And obviously, there's a reason for that. But then when it comes to things like AI and blockchain and all these things in and around you, you must be aware of them, but you probably can't sort of go, well, let's not rush out and do something silly in that particular technological trend.
Yeah, that's great. It's a great point. We pushed back on being labeled a fintech because I think fintechs are fantastic, but I was trying to avoid a lazy narrative. And the lazy narrative was you're either a fintech or you're an old school bank. And I said, well, no. There's quite a spectrum. There's quite a spectrum. And it's important that you understand the judo thesis without labeling us in one bucket or another. We said, look, this is a company that's got three clear horizons. Horizon 1 is 2016 to 2020, which is build a bank and get it to market. Get customers, get staff, start to generate profit. Horizon 2, which is 221 to 226, is about scaling the bank. And that's where we are today. I'll come back to that in a second. Horizon 3, 226 and beyond, is building a world-class SME bank. So today we are very much in that Horizon 2 of scaling the bank. And what I mean by scaling the bank, this is where the technology comes to play, right? That we are investing significant amount of dollars in building a hugely technology-enabled bank. That's Lisa Fraser and her team. We're a cloud-based bank, but we're also we're looking to build some, our own IP that's relevant to SME market. We will become a very technology-enabled bank. I don't want to be called technology-defined.
Yep.
I want to be technology-enabled, because I do believe when it comes to dealing with the butcher, the baker, and the candlestick maker, that they want to speak to a human being. They don't want to. They don't want to get involved in some algorithm or some.
The risk computer says no, right? Yeah.
It says no. So.
Yep.
So, but at the same time, you want a very slick technology-enabled operating model that provides great insights, that deals with lots of the administrative aspects that are currently manual, that builds AI, that again helps the customer and helps the bankers help the customer. So we're very much in year two of building that technology-enabled bank. So when we in the Horizon 1, when we went to market, we said, let's have a technology capability that's fit for purpose, but not fit for the future. Horizon 2 is build a technology architecture that's fit for future. And then Horizon 3 is that we want to build a world-class SME bank. Not the biggest, because I don't believe that's a measure of anything, but the best. That it's a unique model. It's generating high levels of customer satisfaction, high levels of employee satisfaction, attractive economics for its investors, and staying true to its purpose of building a trusted SME bank. So the vision is clear.
Very clear.
Yep. And the technology, as I say, I was always shying away from talking too much about technology because people are lazy and they say, it's a FinTech. Well, what do you mean by a FinTech? And it's because this is much more than just a lazy category. I mean, and the FinTech community is a very heterogeneous community. It's all sorts of different business models, but sometimes these business models don't get the credit that they deserve because they're labeled in a bucket.
Yeah.
Bucket, yeah.
Yep. One question I have on Judo, when you were building out this, and you talked about the people and attracting good people. Looking back now, does it make you a little proud that people now want to work for Judo? They know the name. They're coming from a big four or somewhere, and goes, actually, I'd love to work for that organisation. End up working for that organisation.
Oh, enormous amount of pride in that. I mean, we've got just over 550 people today. We've doubled in the last 12 months, and we'll get another 100 or so in the next 12. We've got about another 150 to 60 people that are part of our third-party outsourcing arrangements but they're dedicated to Judo. But the people inside the company feel like pioneers. They feel like, I keep on saying to people, look, if you want to come and work for a world-class SME bank, come back and see us in 3 or 4 years, and we might have a job for you. But if you want to help build a world-class SME bank, come and do that now. And come and join a company that has got a very strong sense of purpose, a very strong sense of vision, a company that wants to make a difference, that wants to leave a clear legacy about how SME banking should be done. But also in 10, 20, 30 years' time, when you're reflecting back on your own career with your family and friends, you say, look, I helped build that. That's different from saying I'm employee number 34,022.
Yes. Yeah, I work for Microsoft or whatever it might be. And you're like, oh, that's great. But being a part of something, yeah.
But being part of building something is an amazing feeling, right?
Yep.
Because you see, I was an important person in building that company.
Excellent. Joseph, we could talk all day, but thank you so much for your time today to talk about the Judo story, and in particular the book, the Black Belt book, and apologies about the stuff up. We've written a few books, but they're the Black Belt, a masterclass for startups and entrepreneurs, which is available now. I really appreciate you sharing this story, the vision, and also the execution that has happened thus far. and also into the future, which you've clearly articulated. So I really, really appreciate it and look forward to catching up in person at some point in time.
Excellent. Thank you very much, Chris.
Thanks for listening to the FinTech Australia podcast. I'm your host, Chris Titley. The FinTech Australia podcast is a collaboration between FinTech Australia and Sub11. For more information about membership options, news and the events coming up, jump on to the FinTech Australia website. Have a great day. Thanks for listening and we'll catch you next time.